We have just seen the worst one-day fall on Wall Street since those dark days of 2008. It was driven by fear of another recession and worry over whether Spain and Italy will have to be bailed out. The Dow dropped 512 points today. That's 4.3%. But look at the longer trend. Just last April, the Dow hit its high for the year. Since then, it's fallen more than 1,400 points. The decline today wiped out all the remaining gains the Dow had made for this year. In the broader market, the Nasdaq and the S&P 500 were both off today, either side of 5%. Rebecca Jarvis is at the New York Stock Exchange.
And Scott, Rome and Madrid are pretty far from Wall Street, but traders here tell me that concerns over how Spain and Italy and the rest of Europe will pay its bills have global markets around the world spooked.
A stock sell-off that started in Europe spread to the U.S. markets today. Stocks have been under severe pressure for more than a week. The Dow and S&P 500 have both dropped more than 10% from their highs earlier this year, and that puts U.S. stocks solidly into market correction territory. Veteran floor trader Art Cashin warns more trouble is brewing across the Atlantic as skittish European banks and investors look to cash out of American companies.
There's an old saying in Wall Street, when you can't sell what you want to sell, you sell whatever you can, including your grandmother's necklace. So I think some of the people in Europe are having a very difficult time raising the kind of capital they were hoping to get and looking at whatever assets they have here in the United States and selling here.
Fears that Italy and Spain cannot overcome their mounting debt problems led to huge market losses across Europe. England, Germany, and France all closed down. The anxiety is doing nothing to calm the worries of a double-dip recession here in the U.S. and perhaps even another global financial crisis.
And with the economies of the world, frankly, not in a very robust recovery at the moment, the worry is a slowdown in Europe really drags the entire globe down again.
Scott, it wasn't just stocks. Oil and gold, which have both been higher recently, fell today as investors rushed to cash.
Well, Rebecca, what does that rush to cash tell you?
It tells you that investors really can't think of any alternative. They're in cash right now, and they're in U.S. Treasuries, and they're waiting this out because they're looking for a sign that some of these debt problems are behind us, and in particular in Europe, they're not seeing it.
And what's it going to take to calm things down?
Well, that sign in particular here in the United States is going to potentially be the jobs report tomorrow, and also what the Federal Reserve has to say when it releases its minutes next week.
Rebecca Jarvis at the New York Stock Exchange, thank you very much.